What we all need to do is we need to have sound money that's above all of this geopolitics and all of this counterparty risk and all of this stuff. It's got to be above governments and central banks. That's the money.
According to Lynette Zang, sound money stands above governments and central banks. Sound money, physical gold and physical silver, takes precedence over all governments and all central banks. Lynette Zang has asserted this on numerous occasions. She explains precisely what this means and why it is of paramount importance today. According to Lynette Zang, in the current situation, you need gold and silver. Before we move forward, if you want to stay up to date on the latest gold and silver news, you can subscribe to our channel and like this video. Now let's get back to Lynette Zang's view on gold and silver and the overall global economy.
When you're talking about swapping gold for silver, silver for gold, and swapping back and forth, what you're actually doing is talking about a trade. And for me, sound money is my foundation. So I don't want it to wobble back and forth trading it. But, in your process, what was the first thing that we started talking about? What you're trying to accomplish, right?
Yep, my goals.
Exactly. So it's really about the right tool for the job, because when you're looking at silver and gold in any form at all, there is a finite amount of it. And, we were saying earlier, there's gold and then there's gold, there's silver and then there's silver. So your goals, no matter any investment that you're doing, your goals must come first and drive whatever it is that you do. So personally, and also having done so many studies on what happens with gold and silver during hyperinflationary currency resets like we are in, you do see that we'll come to a period where, okay, that ratio gold-silver price action will grow wider and then it'll grow lower, which is where I think we are right now. And then as the hyperinflation kicks into gear, it goes huge again. If you are sitting on a tremendous amount of silver, we also take a look at, you already paid the fees to buy that silver. Does it make sense to swap that out? It might not. It kind of depends. But you can pay your property taxes with silver. It's just going to take a lot more and a lot more space. But if you already have it, we're not about churning your account. This is about making sure that whatever it is that you do actually supports exactly what it is that you're trying to accomplish. And so I believe strongly that I don't really care what the ratio is, because I'm not going to trade my silver. I have enough silver for myself and both of my children for 10 years. I think that's enough, right? But if I were to actually weigh the number of ounces of silver to the number of ounces of gold, even in collectible form, I have way more gold. And the reason why I have way more gold is because of my personal goals, which is to take advantage of what's happening. I can't change it, right? I can't stop the rest of the erosion of the dollar. We need a big crisis. It needs to end.
Physical gold and silver are universal, decentralized, private when held in one's own possession, and finite in supply. Conversely, fiat currencies can be created in unlimited quantities through debt and monetary creation. This simple difference changes everything. The quantity of physical gold and silver is finite. The quantity of money created through printing, however, is infinite. It is not complicated. It is a matter of elementary logic. Gold and silver constituted the original constitutional currency in the United States. Prior to 1965, only gold and silver were recognized as money. A true currency had to fulfill 4 specific functions: unit of account, for fair and transparent pricing; medium of exchange, to facilitate barter and trade, thereby ensuring that one is equitably compensated for their current labor; long-term store of value, so that regardless of when one decides to use said currency, one receives fair compensation for the value originally created. According to Lynette Zang, every investment portfolio should be built upon strategies grounded in sound money. This is where true diversification lies. Without tangible assets at its core, there can be no real stability. Gold and silver stand above governments and central banks due to the vast scope of their functions within the global economy. They are utilized in governmental and financial systems, industrial and commercial sectors, consumer and luxury goods, bullion and numismatic markets, as well as in the fields of technology and innovation. Each of these applications generates demand. This demand stems from a multitude of buyers distributed across numerous industries and nations. Governments and central banks are localized entities. Gold and silver, conversely, are global. It is this broad demand base that elevates physical gold and silver above centralized monetary authorities. Let us contrast this situation with fiat currencies, such as the US dollar. Stocks, bonds, cryptocurrencies, and other assets denominated in fiat currency ultimately depend on a single element, their convertibility into that fiat currency. History teaches us that more than 4,800 fiat currencies have vanished to date. As inflation advances and confidence erodes, demand evaporates. When this occurs, the currency collapses. This is not a theory, but a proven historical fact. Fiat systems are underpinned by debt and leverage. They may function for a time, but not indefinitely. At some point, their value erodes to zero. Throughout history, approximately 190,000 tons of gold have been mined. That is all. Silver, although mined in larger quantities, is also a finite resource. In fact, a large portion of this metal is consumed in industrial applications and is not fully recoverable. Now, compare this situation with that of fiat currency. Lynette Zang points out that inflation is a direct function of money creation. When new debt is issued, confidence in existing debt erodes. As global debt grows, the interest owed on that debt also increases. Since 2022, when central banks began raising interest rates to combat inflation, interest costs have experienced exponential growth. There is only one way to combat inflation: deflation. This is the reason interest rates have been raised. The goal is to curb borrowing and spending. However, although rates have risen, credit conditions have remained lax. Debt continues to grow. Interest continues to accrue. Meanwhile, the world is beginning to move away from U.S. debt. This shift began in 2008 when the financial system effectively collapsed, surviving thanks solely to a liquidity injection driven by money creation. Lynette Zang's perspective is simple. Follow the system's shrewdest players. If central banks are increasing their gold reserves, it is no mere coincidence. Smart money is positioning itself in gold and silver. Strategies based on sound money are not limited to precious metals. Above all, they are grounded in independence and resilience. The ultimate goal is financial freedom and autonomy within an unstable system. Those who understand the current landscape are actively working to offload risk from their own sphere. That's all for today. Let us know your views in the comment section below, and don't forget to like this video before leaving. Thanks for watching.